I've been trading for 6 years now, for 5 years straight, and 4 of them consistently profitable. And over my career, I've so far managed to pull in $1.2 million from trading. Every single dollar, every single crushing loss, and every mistake under the sun, I've basically lived through it all. So in this video, I want to break down the 6 lessons I learned over the 6 years that I've been trading. Everything from the things that you should do and the things that you shouldn't do as a trader that separate the real pros from the people who are just hoping and gambling to make money and get rich quick. Each one of these lessons came from real setbacks that taught me valuable lessons, and the best lessons come from your mistakes and your losers. You have to be able to accept the fact that you're going to lose, and when you do lose, you have to take those losses as mistakes and learn from those mistakes. That is where the real progress is made in trading. If you can learn from your mistakes and you can learn from your losers, there's nothing that's going to hold you back and set you back from becoming a profitable trader, because you continue to refine your system and master your craft and process. Now, before we dive in, let me give you some context on who I am and how I got to this position in life. I started trading at just 18 years old into my senior year of high school, and before that I was just a high school student, pretty much broke, was working summer jobs making maybe 15 an hour if I was lucky, and I didn't have any money from my family. I didn't have anybody that helped me start out. Everything that I've learned to this day has been learned on my own. I was just a kid with a laptop and way too much confidence. But by age 23, I pulled in $1.2 million from the markets. But here's the thing, people think this comes overnight. They see the $100,000 months, they see the $10,000 weeks, they see the $5,000 days, but they don't understand that this is years of struggles, mistakes, and doing everything wrong under the sun to be able to even get to a point to be break even as a trader. It took me years of struggle to figure this out. So let's get straight into it. These are the 6 lessons that basically changed my life. The only way to win is to be the best loser. When I first started trading, I thought you had to be right every single time. I thought the purpose of trading was to outsmart the markets, to be right and never be wrong. So what did I do? Whenever I was wrong, I would double down, or if I was wrong, I revenge traded, and I try to be green every single day. I chase the profits, I chase the green. I didn't accept losses. I never had a losing day, and all that happened is I was blowing up my accounts because I was never able to accept the fact that I was wrong. I would just continue and continue to double down. I turned what should have been small losses into massive disasters, all because I couldn't accept the possibility of being wrong. And as humans, we're basically programmed to think that we should always be right. You can never be wrong. You should always try to win, and that's how society kind of teaches you to do things. But as a trader, you have to think like a trader. A trader thinks in probabilities, and they're okay with being wrong and being humbled by the markets, and then moving on to the next trade as long as it's within their setup and trusting their process and confidence. And I didn't learn this until it was honestly too late. I had already blown 2 accounts, and it took me so long to recover from this. So if I would have known this much earlier and I wouldn't have had an ego, I would have dropped the ego at the door. I would have focused on just the setups, chasing the process and not the profits. I remember a trade where I was up $50,000 on in my first 2 years of trading. This is when I was, full porting my account. I thought I was doing everything right. I had the exact, trading game down. I beat the markets. I was going to be an absolute millionaire. And what ended up happening was not only did the next day the stock pull all the way back and come all the way back down and lose that $50,000 of profits, what it did is go all the way to red, and then from there, when it hit my stop loss, I didn't stop out. I literally just prayed. I sat in it. I kept moving the stop loss down until I completely blew my account because I full ported and I couldn't accept the fact that I was wrong. But here's what I learned that completely changed my trading. The power is not in having no losers. It's in being able to manage your losses and your trades perfectly. The best traders, they define their stop, they know what their risk is, and without hesitation, if the stop gets hit, they're out of the trade and they're moving on to the next setup. If you risk $500 to make $1,500, you only need to be right 1 out of 4 times to be a profitable trader. But if you let that $500 loss turn into $2,000 and you can't handle the heat, now you have to be right 2 out of 3 times just to be break even. The shift from trying to never lose to becoming becoming the best loser is the number one thing that helped me become profitable. Patience and discipline are your edge. If you can't sit out for more than one day, you are likely not a trader, but you are a gambler. In my early days, I used to wake up in the morning, basically glued to my screen the whole day, and I needed to trade like I needed air to breathe. If I didn't have a trade on for the day, if I didn't take anything, I literally felt like I was like itching to have dopamine to take trades, and I felt like I failed if I didn't take a trade for the day. I thought being a trader means I have to trade literally every single day. Like I have to get into the office, I have to take a trade, I have to, manage the trade, I have to be on the screens the whole days. And this was the worst thing that I was doing, because what was happening was I was actually over trading. Now, over trading is one of the most common issues that beginner traders have, because what they do is force themselves into setups that aren't actually great and fit their criteria, because they're just itching to trade. They're either looking for dopamine, or they're chasing profits, or they're trying to, get into a trade when they don't need to take a trade, just because the fact that they want to be in a trade. And this is the number one account killer. This leads to literally forced trades that you don't need to take. I saw trades moving 2 to 5%, and I would just chase them. I got FOMO, I got greedy, I wanted more. Even if I would have a green day on the morning, I would just stick to the screens and I would take trade after trade after trade, thinking that more trades equaled more result. But again, going back to being a trader and thinking like a trader, you have to think about how traders make money. You don't actually need more trades to make more money in trading. It's not like any other thing in life where more work equals usually more money. It's actually sometimes the opposite. Less work could result in more money because you're taking higher probability trades, you have more confidence within your setup, you're able to take out all the emotions from trading and focus on that one setup and that one system, that one ticker, to be able to execute that perfectly. So I would way rather have one setup and one strategy that I execute perfectly versus trying to hop onto different trades, trying to look for the perfect setup. Instead of that, I just trade the system, I trade what's in front of me, and I don't try to overtrade, over leverage, and do these things that I know I shouldn't be doing as a trader. That comes from over trading and not having the patience or discipline to stick to your edge. This year, I've literally already had 3 weeks where I haven't traded a single week. How many of you could sit here and not actually trade for a whole week without losing your mind? You're always going to be forcing yourself to take a setup. You're always going to try to look for something that's not actually there. If you can't sit out for just at least a day or even a week as a trader, you're probably not ready to actually be a trader yet. It's all about the system. It's all about looking for the setups that fit your criteria. And it's not about chasing every single opportunity, because truth is, every single day doesn't have equal opportunities. There's going to be better times to trade within the market. There's going to be better setups. There's going to be better opportunities, and there's going to be better conditions. A lot of people try to outsmart the market. We don't want to outsmart the market. We want to beat the market by being able to trade in the best times to trade and not trade like the 90% of traders. If you trade like the 90%, you're never going to be the 10% because you're not doing the things that the 10% are doing, which is being selective, waiting for the best times to trade. Trading the easy. Embrace when it's easy to make money. Why would you want to trade the markets when they are hard? Why would you want to do that? It's like going up against a brick wall, throwing some punches, and then thinking that you're going to get through that brick wall. The market is hard. You have to accept it. And when it is, you have to sit out, be patient, wait for the next, cycle of great setups to come. And that's when you take and put your, foot on the gas pedal and really press, really push. And that's when you break through that brick wall and you really get some momentum going. The market doesn't owe you an opportunity every single day. Sometimes the best trade is no trade. Learn to love doing nothing when nothing is there. This is something you must do as a trader. And this was actually one of my biggest issues I had when I was first starting to trade. I would just overtrade. I wouldn't be able to sit out. And it's because I did not have the patience and I did not have discipline. Adapt depending on what the markets are giving you. This lesson cost me more money than I care to admit. I'd find setups that worked perfectly during one market phase, and then when the next market phase came along, I would stubbornly stick to that setup and I would just lose a bunch of small paper cuts, but it would be losses that piled up and piled up and piled up for no reason. When the market starts showing you something different, you cannot be stubborn. You have to be able to adapt quick. And the best traders are quick. They're people that can cut their losses quick, change up their approach quick, let them know when the market is wrong quick. These are all things you have to do very, very quick as traders. And some of the best traders are just very quick. When they see an opportunity and they have conviction, they're in, bam. When they're, when their stop loss gets hit, without hesitation, they're out right away. And these are all things you have to learn to do as a trader. For example, when the market was making a massive move up the last 3 to 4 months between April and June, there were a ton of great breakout opportunities within the market because the momentum was super, super strong because we'd had a 30% correction in the major indexes. A lot of stocks were coming off of big bottoms and making big strides and big moves. There were a lot of themes, but over the last few weeks, the momentum has been slowing down. So instead of forcing breakouts and trying to buy stocks at the highs, that is where I got, paper cuts. So now what I'm doing is I'm adapting my entry strategy a little bit to give me better entry opportunities and understanding, okay, the market maybe needs some time to set back up. I either should not trade this and I should adapt, or I should look for a different entry strategy that's going to give me a better risk to reward so that I'm not taking small paper cuts and I'm not trying to force the market to do something that it's probably not going to do. You have to read the signs. When breakouts stop working, when volume is drying up, when there's really not much to do and your strategy isn't giving you the best results, you have to adapt and you have to do it quickly, because if you take too long, what's going to happen is by the time you know it, your account is going to bleed. In bull markets, you should trade momentum and breakouts aggressively. In choppy markets, you either sit out, trade mean reversions, or try to trade the range. In bear markets, you don't try to long and trade breakouts. You try to trade with the trend, trade to the downside, fade the rallies, and look to play with the markets. Same trader, different approach based on what the market is doing. Execution beats analysis every single time. Let me be brutally honest with you. 80% of my losses come from lack of good execution. They don't come from bad setups, and they don't even come from having the wrong idea of what the stock is going to do. I'd spot the perfect setup, I'd do the exact analysis that I always do, but I'd botch the execution. I'd either take a FOMO entry, an entry that's not within the criteria that I should be taking, or get emotional, let the trade either stop me out too early, not take profits, or just botch the execution completely and not even enter the trade. You can have perfect analysis, but if your execution sucks, you're probably not going to make money in trading. It's very simple. Hesitating at the entry, jumping into the trade too late after it already passed your entry, sizing too big, these are things that are going to absolutely destroy you as a trader, even if your setups are absolutely perfect. Perfect analysis does not pay your bills. The perfect execution does. Everybody wants to be a great chartist and have, all the charts up on the screen, know exactly how to read where stocks are going to go. But when push comes to shove and it's time to execute, the execution is what's lacking and what's flawed. And the moment I started focusing on actually being able to execute correctly, have way more emotional control, that's when everything started to click for me as a trader, because at this point, I wasn't just guessing or predicting where stocks were going to go. I actually had a thesis that was actionable. I had some alpha. I had something that was able to make money. And this is called an edge. An edge is something that you have when you have a good, understanding of the charts and what stocks are going to do. And you can also execute that edge correctly. Think of it like a professional athlete. They don't just show up to the game. They don't wake up, 30 minutes before the game and then get into the game. They practice for years. They practice for months before. They have training camps. They do the same thing over and over and over and over again. So when the execution part comes and they have to, kick a ball into the goal, for example, that execution is going to be almost perfect because they've done it every single day. So they're focusing on not only just playing the game, but actually having repetitive reps to become good at one specific thing and master all these little things so that when it's time to play the game, they're ready and they're able to execute at top level. Master your mechanics before you worry about finding that perfect setup. Execution wins over analysis every single time. Price action and volume are king. Forget lagging indicators. When I started trading, my charts had MACD, RSI, Bollinger Bands, name whatever indicator you want. I probably had it on my chart, and I thought the more indicators, the more I was going to know what the market was going to do and the more money I was going to make. But here's what actually happened. All those lagging indicators just clouded my judgment. It was too many things on the chart. I wasn't able to actually read price correctly, and I was focusing on lagging indicators that don't really tell you what's going to happen in the stock, instead of focusing on true edge, which is volume, and price, which are printing in real time. Forget lagging indicators and overcrowded charts. When I stripped down my charts to just volume, price, and the moving averages is when things really clicked for me, because now I was able to focus on trends, I was able to focus on price action, and I was able to focus on things that were actionable in real time, instead of seeing a MACD cross that was happening, weeks after the stock actually had started uptrending or downtrending. And here's the simple truth: volume confirms the move, and price is the truth. It tells the whole story. When you combine price, volume, and levels, you can tell exactly where big money is entering and where big money is exiting. You don't need all these lagging indicators to confirm your thesis. You don't need to look for everything under the sun to confirm the things that you know are happening in front of you, because price is playing these things out in real time. If you see a stock breaking out of a consolidation pattern but volume is weak, you pass. No volume, no conviction. But if you see that breakout happening on 3x average volume, now you know you're going to be looking to take that trade, because volume is your confirmation that there is aggression within the markets. Volume is like a lie detector for price. Price can fake moves, but volume does not lie. If someone is buying a lot of shares, price and volume are going to tell you that a lot of shares are being accumulated. When you see heavy volume at key levels, that's where institutions and whales are stepping in. When you see light volume on a breakout, that's where retail traders are getting trapped. I remember a trade it took about 3 years ago that really sold me on volume. The stock was pulling back pretty aggressively, but the volume was very, very dry, and the stock had been pulling back over the last few days into a very key level. I started seeing that volume was increasing heavily as the stock was starting to make a bottom near that key level, and volume was continuing to pile up as the stock was starting to reverse and form like a pattern of a tight flag wedge kind of look. And as it was breaking that pattern, the volume just kept piling up. So I started to notice that volume actually has patterns like price, and this really sold me on the fact of volume, because I started to understand when there's a lot of volume, that means that the real move is happening, and when there's low volume, that usually means that there's no real big sellers or buyers, for example, but the stock needs to come down to a key level for buyers or sellers to get reintroduced with a lot of volume. So the moment I saw that, I entered the position long, and I made a ton of money on that. And ever since then, I use volume to confirm every single move I look for in the market, and it has really saved me a ton of money and has made me a ton of money just by being able to read the volume correctly. If you can read volume correctly, you're trading on the side of institutions instead of getting crushed by them. That's the difference between consistent profits and random results. Momentum equals opportunity. Here's something that took me way too long to understand. We don't trade shop. I used to think that every single day was a trading opportunity, and this goes back to having patience as well. This is how I learned a lot of my discipline. We only want to trade when there's clear direction, volume, and a strong trend. The strongest trends are where you're going to make the most money, and the best swing traders in the world have said this multiple times. If you listen to any of the best swing traders in the world, they will say all the money is made in a few periods of the year. Everything else is sit out of the market and wait for those strong trends. In my early days, I used to try to trade everything. Choppy markets, things going sideways, not a lot of volume, not a lot of action. And I thought that every single move was an opportunity, but I was basically dead wrong. Real opportunity comes from knowing the stages of the market. If you know that the market is in a stage 2 markup phase, that is when you want to be trading within the market, because statistically, that period of the market gives you the best results. So why would you want to fight statistics if you know you're going to be able to make this amount of money during this market? and this amount of money during another market, and that first, market cycle is going to make you the most money, why would you not want to be wanting to trade that one instead of, one, wasting your capital, two, wasting your time on the other phases of the market where things are choppy, where there's no follow through, where there's not a lot of movement. You always want to be trading stage 2 markup phases. That's when momentum is clearly defined, there's a lot of volume, and there's a trend and themes that are driving the markets higher. During these momentum phases, that's when you get the cleanest setups. You get pullbacks to the 8 EMA, 21 EMA, tight flags, patterns, and continuation looks that set up for absolutely massive moves. And just one period of these a year can literally make your whole year. And all you have to do is be patient and sit out during the rest of the year when things become choppy, and try to protect your capital. When I see stocks are getting into a clear stage 2 markup phase, that is when I trade aggressively, and when there's a strong theme, that is when I push my foot on the gas pedal. But when things start to chop and there's no direction at all, that is when I try to sit out and be lighter on my trades. Most of my biggest wins come when the market is moving in unison and there's a bunch of really big moves happening within the market. I don't have to guess which stocks are going to make massive moves. I'm just focusing on the leading themes and leading sectors, and letting the market momentum carry my wins and make them basically exponential as the momentum ramps up. Most of my worst losses came from trying to trade in choppy markets when there was no momentum, and trying to force things when the market was not ready to make any moves. The market rewards you for waiting for the right momentum conditions, not taking a trade every single day. Less is more in trading. Remember that. Before I wrap up, I wanted to share one more bonus lesson that wraps everything together. Trading is a 90% emotional mastery. All the technical analysis, all the perfect setups, all the trends, and all the momentum, it doesn't matter anything if you cannot control your emotion when money is on the line. Whenever I used to have wins, I thought I was the best trader in the world. I would get an ego, I would oversize, I would try to make the same amount of money the next day. And what would happen is I would just blow everything up. And every single time I had a loss, I would get super down on myself. I wouldn't be happy at all for the week. I'd revenge trade, I'd get emotional, and I started to realize I had to detach myself from my P&L. It doesn't matter how much money you make, you have to trade a system, you have to trade the process and not trading the profits or trading for profits. You have to trade what's in front of you, not the profits, not the P&L. That is going to set you back years and months as a trader. Here's the mindset shift that changed everything for me. Think long term and think about the next 100 trades. That single thought turned emotional swings into calm consistency. Had a big win today? Amazing, but stay humble and don't think you're on top of the world. Drop your ego, because in the next 2 or 3 trades, you might lose it all and blow it back up. Had a big loss? That doesn't matter in the grand scheme of things. You have to think about the next 99 trades. You still have enough time to prove yourself right as a trader. Just don't get into an emotional spiral. This long-term thinking keeps you grounded. One trade doesn't make or break you anymore. You don't think that one losing streak or one bad trade means that you're a bad trader. It just means that the trade didn't go in your favor. It happens, it's within your system, and you have to understand that you're not going to win every single trade. You have to think about the long term and having consistency, being able to make money over months, over multiple months, over years, over decades. That's what we want to do as traders. We want to compound, and not think about every single trade that is happening. If you had one big win, that doesn't mean you're the best trader in the world. You had one loser, doesn't mean trading is not for you. You have to think about the overall process and always think long term. So there you have it, 6 brutal lessons that I've learned while building a $1.2 million portfolio over 6 years of trading. Be the best loser, master risk management first. Patience and discipline are your edge. If you cannot sit out for more than one day, you're not ready to be a trader. Adapt to the market conditions. Trade what the market gives you and not what you want the market to do. Execution beats analysis. Perfect execution matters more than perfect analysis. Price action and volume are king. Forget lagging indicators and just trade what's in front of you. Momentum equals opportunity. Stop trading every single day. Do not trade when things are choppy. wait for the right cycles within the market to make you the most money. These aren't just trading tips, they're the foundation of a profitable trading career, but knowing them and applying them are two completely different things. Thanks for watching. If this helped you understand what real trading looks like, please hit the like button below, subscribe, and be on the lookout for more content like this. I'll catch you all in the next video. Bye now.